Hi, everybody. I'm Nancy Beal with Remax, and I'm sitting with Fred Bermudez from Paramount Mortgage. And we're talking today or answering questions today that we find a lot of new clients have. So, one of the questions was we're going to ask what's the difference between FHA and conventional? And do they really need 20% down on buying a house, Fred?
Well, first of all, you don't need 20% down, especially when you're buying a primary residence. If you're buying a rental, uh, yeah, you could put 20 or you may need to put 20 or more down. It just depends. But for the typical client that we come across, first-time buyers or just buying a home or moving up, don't need to put 20% down. You can put as little as 3.5% down on an FHA loan, and you don't have to be a first-time buyer, which is a myth that we do here. A lot of folks feel like you got to be or that FHA is for first-time home buyers, but you don't have to be a first-time home buyer. You can put 3.5% down, and in an FHA. Conventional requires 5%. Now, the difference is important because I usually get the question, well, why would I use FHA and why would I use conventional? Why is there a difference? What's the difference? So the difference is primarily boils down to um, mortgage insurance. It's one of the biggest differences. FHA is a little easier to qualify for, but mortgage insurance on an FHA loan, there's two types. One is an upfront mortgage insurance in the amount of 1.75% of the purchase price, and that amount, six, seven, $8,000, whatever it may be, is added on to the balance of your loan. Okay, so they hit you there, and then you have the monthly mortgage insurance, and maybe take a step back on what mortgage insurance is. Whenever you put less than 20% down, it's an increased risk to the banks. Okay, so they take out an insurance policy that covers them should you default on the loan,
Okay,
right?
right?
That's mortgage insurance, but you pay the policy. You do.
Okay.
Okay, so FHA, you have the upfront 1.75 added to your balance and a monthly, and that'll be a couple $100. It's 0.85% of the loan amount. So generally, you're going to have those two types, whereas conventional, you only have one, and that's the monthly. You don't have anything added to your balance. They don't hit you there. So ideally, right off the bat, that's what you want to try to do as a conventional loan. It's cheaper, and you just have to put the 5% down. But what Nancy and I do with our clients is we find areas where it's approved to go conventional and put 3% down. So now you kind of have best of both. So we look up those areas, certain pockets, all through California, you can put as little as 3% down. So to answer your question, don't have to put 20% down, and you can put as little as 3% down and still do a conventional loan. So,
Well, really informative. Thanks,
yeah.
Fred. Appreciate that. We hope that helped. We'll be back with some more questions and we
And
hope that
answers.
and answers, and we hope that you like this video. Thanks, Fred.
You're welcome. Thanks, guys.
Bye.